闪烁的彩虹，爱却无边无际，双只手有空，眼只有辫子，为白了线。你不在的心，一个道的境界，只不过就上了无情为我要新世界，爱空虚过不再管理，用尽全世界，就在频频动完没动手，跪在这里，不必再再可惜，一得到的季节。就外面别曾经完的错让幻变，甚至是容易点爱你。
Good morning, everyone. How's it going? Look like we're stuck at this level right now, 768. Down here at the bottom at 678. We're looking at 90 points. If we break out of this level, 3 more minutes for the Fed speak. I'm switching to micro instead of mini. It was so fast, so I just trying to play it safe. Traded micro, just getting a little bit more, 20 points. Micro. Minutes. I wouldn't do anything. 1 minute. Have to wait. Here it comes. Well, I suppose.
Of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter.
Let's listen to
Private
the
domestic
Fed.
final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's.
Take some time off, my friend.
Within PDFP, growth
You'll be
in
okay.
consumer spending
Take some time
moderated,
off.
while investment in equipment and intangibles rebounded from weakness in the fourth
Good
quarter.
morning, everyone. Good morning, Crystal.
Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains
See what we
somewhat
got.
elevated relative to our 2% longer-run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food
Wow.
and energy categories, core PCE
678 at the
prices
bottom.
rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation.
We'll be okay.
Tariff increases announced
We'll
so
be
far
okay.
have been significantly larger than anticipated. All these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time
Yeah, I just switched it to trade and micro instead of mini, just in case. Yeah, it's like no directions right now.
Price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions.
Hey, good morning, Andy.
Americans. We may find ourselves in a challenging scenario in which our
You're the only one. Andy's here.
If that were to occur, we would consider how far the economy
Andy's here.
is from
That's
each goal
fine.
and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next
I
week.
push it to the VWAP.
Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
Yep, go all in, huh?
Our success in delivering on these goals matters to all Americans. We understand that our actions affect
Is it too
communities,
loud, you guys?
families,
Is
and businesses across the country. Everything we do is in service to our public mission.
the audio
We at
too
the Fed
loud?
will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Vietnamese food sound good to me.
Chair, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just want to.
But you can hear the Fed speak, right?
Part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out.
Is it better now?
And also,
I have the Fed speak in the background
I think it's too early to know that.
beside my voice, so
Ultimately, we think
you should be able to
is
hear
in a
it.
good place to
Very
stay
loud.
as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look where we are today, we have an economy that, if you look through the sort of distortions in Q1 GDP. You've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid.
Went all the way down to
Inflation is running
80,
just
780.
2%. So it's an economy that's been
We're looking at,
resilient
what,
and
50
it's in good
points?
shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying
So
inflation
we'll
picture
do the VWAP,
is,
the resistance
is
level
good. It's
VWAP,
what you see,
850.
Which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
Janelle Marte
Hit the
with
VWAP,
Bloomberg.
came back down again.
So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So go through 2024 up to the day. We've had unemployment in the low 4s for more than a year. We've had inflation coming down and now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress.
Yeah,
toward
like I
those
said,
goals.
I switched
Again,
it to
if that's the way the tariffs
micro
shake out. The thing
instead
is,
of
we
mini,
don't know that.
doing
There's so
3
much
contracts,
uncertainty about the scale, scope, timing,
risking
persistence
15 points.
of the tariffs. So that's that. In terms of
Still sitting
preemption,
on my hands right now, so
I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been
stuck in
above
this
target
level
for
right
4
now.
years. It's not so far above target now, and we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is, but. In any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We look at the level of the unemployment rate. We look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. We're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. That's not the situation we're in, hypothetically. But we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So, again, difficult judgment to make. And not
Looks
when we
like
face
it's
it
800
today,
on the whole.
we may never face it.
800.
But, we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, he said, solid that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing.
That's crazy.
So we're always going to do the
It
same
doesn't
thing.
look like Trey.
We're going to
The
use our
trader
tools
bait
to
is not working
maximize
correctly.
employment
I have to
and
manually
stability
take me
for
out.
the American people. We're always going to consider only
That was
economic
how many
data,
points?
the
40,
outlook,
$48.
risks,
Like I said, I'm trading with
and
my
that's what we're going to consider. So it really doesn't affect either our job or the way we do it.
micro. Trading with micro. No.
Hi, Howard Schneider.
With micro
Reuters.
3
Thanks
contracts.
for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead. I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense about how?
Yeah, I had to manually take me out, so.
What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty.
Yeah, I could do this more. I'm not sure. And no direction right now,
and
so
that
I thought I
downside risks
could go small
have
right
increased.
now.
The risk is, as we pointed out in our statement, the risks,
Bit
the
lucky.
risks of higher unemployment
I
and higher
guess, bit
inflation
lucky.
have risen, but they haven't materialized yet. They really have. They're not really not in the data yet.
Yeah,
So
my stop is
and that
15
tells
points.
me more than my intuition, because I think it's obvious.
Must have
actually, that
stop loss in
the right
place,
thing
and
for
after
us to
that,
do is that we're in a good place. Our
push it back
policies in a
down
very
again.
good place.
We're looking at about
And,
30 points within
the
what
right thing to do
5
is
seconds.
await further clarity.
Crazy.
And I there's usually things
Yeah.
clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a
Look
good
like
place,
we
and I think the appropriate thing is for us to wait
we
and see
bottom at
and get more clarity
763.
about the direction
So
of the economy.
this is level right now, so I'm watching for that. 763, 764,
The last time
and
around, there was
down
a
here
lot
says
of,
41.
negative stuff,
Give me a
negative
second.
sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hasn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching extremely carefully.
It broke that
but don't see really
63.
much evidence of it in actual
Push it back
economic
up again.
data yet. And by the way, consumers keep spending.
5
credit
seconds.
card spending. It's it's still a healthy economy, albeit one that is shrouded
Let's go
in
lower.
some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's
I'm
been
out.
criticized
So
recently
slow.
by a former governor
I'm
for
out.
what he calls mission creep. You take on more problems using
Okay,
more
$64.
tools, and end up
And you know that
building
with
tools to
Apex,
deal with the fallout
if you
of
made
those tools,
$50,
which then makes
you
it a
qualify
given that
for
you will act
1 day
more
of
aggressively
trading.
in the future.
Any
Is
5
that
of
a
those
fair
days.
critique, and
Let
is
me
that
switch
something
to a
you would
different
be
account.
looking at in your framework review?
Sorry, say
Switch
that
to a
again.
different account.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems that to go too far. Is that something that
I'm back.
the critique was based around the fact that you did QE and QE and QE and
Yep, just right now I'm
and,
just want to make
and
$50 per
went
account
beyond the narrow
so that I'm
confines of your
qualified
mandate.
for a payout. I'm working
Well,
on
I mean,
the
there are a couple. That's not really
second
beyond the confines of our
from the
mandate.
top.
Look, I would say this: we did
right
things-
now.
Essentially,
Like
we're
I
on
said,
emergency
only 50
footing
bucks.
for a couple of years in the pandemic. and
Like I
it's
said, I have
very
to trade
fair,
8 days
very
to
welcome
request a
for
payout.
people
So
to look back over
working
what
on
we did
that.
and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time.
So we
I
know
completely
that
accept the
our
thought that
bottom
we
at
could have explained it better.
742. Down
There's
here's
a lot of
the next
thinking
one
that
is
went on to deal with
763.
QE. I can tell you that
Up here
the
we're looking
reason
at
we
what
did
780.
was we were concerned
Very
that
very
we
tight.
didn't want a
So I'm
tight
watching for those
sharp
three
tightening of
levels.
financial conditions
See, I
at a
can take
time
very
when we
very
thought
quick
the
trade.
economy was still
My
vulnerable.
stop is
And so we
15
did
points.
hold
Trading
on
3
for a long
micro
time to QE, and
instead
of
of
course
a
stayed
mini.
with everything. And then
Because
we'll be able to
I don't know the
QT,
direction, so and then
and,
really,
we're down a
yeah.
couple of
So
trades.
I
I
decided
have
to
conclude,
trade
we
micro
certainly, with the
today.
benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. It's we knew doing this in
Okay,
real
Andy.
time that we weren't going to
Thank you so much for stopping by, my friend.
Those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the
Broke
mandate,
that.
such as climate change
812.
and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay,
Wow.
on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very
Watch
little
for
on
8:30.
climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that
Watch for 8:30.
that we've taken climate and it's something that we're spending a lot.
Yeah, I
of
wouldn't
time
go
and
short right
energy
now.
on. We're
Buy a
not.
step in
We have
very
very,
strongly
very
at.
narrow things. We did one guidance for the banks.
I
And then
don't
we
know.
did
I'm asking
a
only 8
one-time,
points, so
stress analysis, climate stress analysis, and that's it. And we dropped out of the.
we will touch in the VWAP again.
financial system.
No.
So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is
Taking up, the question of bringing unemployment rates down to specific categories.
we didn't do that. What we said was that we never targeted any
880.
unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people
I don't want to chase it.
don't
want to chase that long.
That's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that.
924 next.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You said wait and see, and the
924.
economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the
Oh,
breaking
look at this
point? What would
5 minutes
have to
candle, you
happen
guys. Look at this
to
5 minutes
prompt
candle.
a
So
rate cut
strong.
specifically?
Well,
Easy.
So we really don't see in the data yet big economic effects. We see sentiment. There are
Yep, look at that
concerns
5 minutes
that
candle.
higher prices may be coming or things like that. So people they're worried now about inflation. They're worried about the a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economy, weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation.
$27.
Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
I'll try it again.
Hi, thank you, Chris Rugaber,
What
Associated
the?
Press.
Not
I just wanted
taking
to
my
follow up. Earlier, it
my
sounded like
bid.
you said it was unclear how
I missed
the
that.
Fed, what kind of
Did
interest
not
rate
take my
decisions
bid,
will
man.
make
There's something
later this
wrong
year.
with the
So does
trader
that,
bid today.
in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by
It went all
this?
the way down to
You know,
54.
we don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. We don't also kind of poll
Today
people,
is
so
the day.
I really wouldn't want to try to make a
How's it going,
specific
Mavic?
projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. We could include us holding where we are. We just are going to need to see.
Yeah, I took a $30 hit with that account.
Play out before we make those decisions.
Man, I don't know why. It went to my take profit. Did
When
not
you
take
address
it.
the issue of
This is
how
strange,
the Fed
crazy. I have to
handled
manually
both rising unemployment and rising
close out.
inflation, how are you thinking about the fact
I don't
that
know,
addressing
man. I don't know
one
should I trade or
would
not, but
exacerbate the other?
went to my
So a
take
rate
profit.
cut
Did not.
to reduce unemployment could
So
worsen
I took a
inflation.
$30 hit
How
with
does
that account, but that's fine.
How do you handle those
Well,
challenges?
you just captured this is the issue with
Yeah.
The two goals being in tension. It's a very challenging
Well,
question. Now,
Just
there
just
can be
lock
a case
yourself
in
out,
which one
Mavic.
goal
To be
is
honest, lock
very
yourself
far.
out. That's the benefit
One
of
variable is
trading
very far from its goal, much
StepX.
farther than the
Man,
other,
just
and it's
hold
so
your
you
nose
concentrate on that.
and click on that
Frankly,
button that
that
said
was the
lock me out
case.
for the day.
Well,
Yep,
it
that's the
wasn't
only
case
way.
where
There's no
overly
other way.
intention, but if you go back
Yep,
to
just hold your nose and
2022,
go.
it was very clear that we
Yeah.
needed to focus on inflation. The labor market was also
Yeah,
super
today's
tight,
not
so it wasn't-
not the day. So
wasn't really a
just
trade-off.
click on that button and lock yourself out, no
I
matter
think you know
what.
what our
Yeah,
framework
this is the only
document
way
says. It says
to be
we look at
successful
how
in this
far
business,
each
you
goal,
guys.
each variable
Have
is
to
from its
control
goal, and
yourself.
also we'll
I
factor in
keep
the
saying
time
that
it
to
would
me
take to
every
get there.
day.
So,
Not today,
that's
not
going to
only
be
today, but I
potentially a
keep
very
saying that
difficult judgment.
you must have
But the
some
data
kind of
could break in a way that's
responsibility
not. I just
or
don't
some
think we
kind of
know that.
control in
Data
order to be
could easily
successful.
favor one or
Other
the
than
other.
that, there's no
And
way
right
that we
now,
can be
there's
successful in this
no way to-
business.
no
Not for
need to
sure.
make a choice,
100%.
and no real basis for doing so.
Hi.
Oh, you
Victoria
did?
Munoz with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts.
Yeah,
And I know
Crystal,
you've talked
man,
many times about
we
how
must have
the
to
path of the debt is unsustainable.
hold ourselves
Given that we're also
accountable,
talking right now about
lock
the economy
ourselves out.
slowing, potentially even recession, I was just wondering, is there a
Yeah,
danger
I'm
that spending
still
cuts
working on
now
that too.
could
So
slow growth a lot more?
We don't give Congress fiscal advice.
I know when to size down.
They're gonna do-
That
we
for
think
sure.
what they do is
Know when to
give it
size
and
down.
Put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable
Hey, Flo.
level, but an
How's it
unsustainable
going?
path. And it's
How's it going,
on
Flo?
Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Would you think that they should take macroeconomic conditions into account as they look at this?
Not
think
much,
they
man.
don't
I have
need
not
advice
traded
or
my
advice on how to do fiscal policy
Topstep
any
accounts
more
for
than
a
we need
while.
their advice on monetary policy.
Yeah, just trying to focus on these Apex to get some kind of payout. So hopefully I'll be able to do that. I'm so close to get some payout from
In your
Apex,
Jackson
so
Hole comments last year,
working on that.
you said you would not welcome
It's kind of
growth
nice
going
that
into market
your account
conditions. The unemployment
being
rate
funded.
was 4.2%,
You don't have to worry about
which is what it
monthly
is
feed
now.
and things like that. So
Many
I
forecasters
don't
now
have to
predict
trade.
a higher
So,
jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation.
What's for 80?
What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that
where
we
we
were
are.
there for,
No.
for inflation for a couple of years. And
But
we wanted
like
to
I
show
said,
also
man,
that we're there
our
for
job is
the
not
labor
to
market
worry too much
and
about
support
where
that
we're
we send
going.
that signal.
Our job is trying to
Fortunately,
catch
since then, the labor
10
market
points
has really,
here,
the
5
unemployment
points
rate
there,
has really been moving
a
sideways at
few
a
points
level
here and
that is,
there.
well in
That's
the
our
range
job.
of mainstream
But I
estimates
don't
of
know.
employment. So
To be
that
honest with
concern,
you,
has
nobody
gotten a lot
knows.
less. So,
Nobody knows,
you're
man.
at 4.2% unemployment. I
You
think
like
we
to
were in a very
trade.
different situation. And now we have a
I know, I
situation where,
too
the
like to
risks
trade,
to
but
higher
sometimes,
inflation
man,
and higher
we must
unemployment
sit on our
have
hands,
both
man,
gone up,
before we
as
get
we
into
noted in our
trouble.
statement, and we've got to
Sit on
monitor
our
both of
hands.
those. We actually
And you can
have a
see that for the
potential
last, what,
situation where there may be a
5-10
trade-off or
minutes, we're not
tension
going anywhere.
potentially.
Very
We don't have it
difficult to
yet,
trade,
and we
that's
may
for
not have
sure.
it, but that's what we have, and that's why I think it's a very different situation.
I guess I want
Yeah.
to follow up by
Yeah,
asking
right
how
now,
much of
I
a
don't know
rise in
where
the
we're
jobs
going.
rate you could
For
tolerate.
sure.
Yeah, I can't give you a
But
I'm
again,
not
for the
gonna try to
last,
give you a
what, couple of
specific
months,
number. I'll
man,
just
we're not,
say
we don't
we
know
have
where
to now
we're
be looking
going.
at both variables, and which of them is
Just follow the price actions,
demanding.
right?
If
So
one of them is demanding our focus
when
more
the
than the
market
other,
go up, we
that
have to
would
go
tell us
long.
what to
The
do
market
with
go
policy.
down, we
If
have to
they're more or
go
less
short. We must have our stop
distant
loss
and
in
equally
place. We all good.
or not distant, then we don't have to make that assessment. The assessment is you wait.
Yeah, he's still talking. You guys hear? Can you guys
I'm not
hear?
going to try to be really specific about
Clearly?
what we need to see
For
in
what,
terms of
for what
number,
he's
but
saying?
If we did see,
We got it
significant
really loud. I don't know if it's too loud or
deterioration in
not.
the labor market, of course, that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical.
Yep,
We're
we'll get
just
some
gonna have to wait
actions
and see how
when he
that-
finishes
how it plays
talking.
out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks.
Yeah, but
over
I
the
am
weekend in Geneva
for sure that we are
between
at the
US
top of
and
the price
China.
range right
A
now,
lot of
that's for sure.
economists are attaching an awful lot of importance
Yeah,
to
we're at the top of the
what
price
we hear
range.
from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, these are not talks that we're in
This
any
is the
way
5
involved in,
minutes.
so I really can't
Look like
comment
we got a
directly on it.
5 minutes
But what I will say is
support at
this,
44.
we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive
Yeah,
judgments
we going
about
up, man.
what will
The buy to
happen
keep stepping
at a
in.
time when,
But who knows, right?
when the
It
facts
can
are
pull a
changing.
drug on us. I mean,
Just on the
can drop 100 points from here, so
falling shipping volumes from China over these
very
tensions.
tight.
I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and
very,
that has
very
the
difficult to
potential
trade.
change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods
Yeah.
increased
I hear you.
significantly in the first quarter. Do you think that this situation could cause a delay in
in this
impact of
game,
tariff on inflation?
we fighting
And
with
does
ourselves.
this mean that it will take longer time to reduce
Me
uncertainty?
versus me.
The decision we made today? Which decision?
So the future decision. So the volume of imports
I went short.
imported goods
Didn't take my bid.
increased significantly. So
I don't know.
the
Something wrong with Trader
impact
Bait or
of,
something. I don't know,
the
man.
imported inflation
I have to
may
click on
delay.
that flat
So,
all to make
what
sure.
is the impact?
Flat all.
Okay.
Your
In
future
case,
decision?
man.
Okay, so, I mean, I think we
Man, I was,
we think that there was a big
When they go
spike
short,
in
I don't know.
imports, right? Very big, historically large, really, and to beat tariffs. And now that should
I
actually
don't know about
reverse.
easy,
So
Crystal.
it's it's the difference between
I don't know about
it's
easy.
exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter,
That broke that
be
we
reversed
want.
so that we have,
Wow, looked like it broke that 5 minutes
unusually
candle
large
too.
contribution to
Yeah,
usually
it
positive.
broke
That's
that
very likely
5
as,
minutes
as
here.
imports drop
40,
sharply. You could also
45.
have, very likely you'll have restatements.
Watch
of
if
the,
you
of the
come back and
first quarter.
retest that
It'll
45
turn
again.
out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or
Too far.
inventories, government.
Far.
Anyway, it's
I
a
was
cleaner read on,
watching that 45.
on private demand, but
There you go.
that too probably was flattered a little
Might
bit
want to come back and
by,
retest that 45 again.
by strong
I'll see
demand
how
for
it is
imports
so
to
I
beat
can go
tariffs.
short.
So that might overstate. It's a really
There you
good
go.
reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a
I'll
signal.
check it.
It's a little bit
45.
confusing,
Watching
but
for
I
that.
think we understand what's going on. It's not
Okay,
really
so
going to
it broke,
change things for us.
broke it back up. 45 has to hold.
Courtney Brown from Axios. I guess, we talked about some of
Have to
the
trade, man.
indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean look at the state of the economy. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses, and so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting, and so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate
Wow,
into
it's a top.
the hard
I
economic
wouldn't
data.
short, man. Look at
How are you thinking about that when interpreting some of the signs in the softer survey data?
25 seconds before this candle, this 5 minutes candle to close. Wow, we're at the top of the candle.
Sentiment data and consumer spending has been weak. It's not been a strong link at all.
14 seconds.
On the other hand, we haven't had a move of this, speed and size.
80.
So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at that just and saying that we're sure one way or the other. We're not.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you were monitoring the shipping data, and we have seen in shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else.
Here we go.
And,
$48. Okay.
Kind of moving sideways.
That's fun.
Fairly low level.
Back in the green.
President Trump has indicated that he will likely name a replacement for you when your
It was
term
8 points.
as chair expires next year.
3 contract, micro.
Your position on the board runs through January 2028, I believe. Would you consider remaining
Small
on the
money,
Fed board, even
not
if you're no longer
1,000,
chair?
not millions. But the point is this:
my whole focus is on
me trading,
my colleagues' focus is on
me put on
trying to
what to put on,
navigate
or
tricky
walk on the fire, walk on the
passage we're in
fire,
right
or
now,
something like
trying
that.
to
Yeah.
make the right decisions.
Me
We wanna
trading,
make the best decisions
control,
for the people that we serve.
risk
That's what
management,
we think about day and night, and this is a
know when
challenging
to get
situation,
in,
and that's 100% of
to
our
get
focus
out.
right now.
That's the point. Yeah.
Chair Powell, Jennifer
Back in the
Schomburg with Yahoo
green.
Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met
yeah?
with Fed chairs, and you
Oh,
met
that's
with
weird.
Trump during his first
I
term.
have no
Why
problem
haven't you
with that.
asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never
Maybe I have to
will.
clean the
It's
lens.
not- I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to
That's
meet
okay,
with him
man.
given the opportunity?
So it
to
doesn't
learn
show
more?
my
It's
wrinkle
never
and
an
everything, my
initiative
old
that I take. It's always an initiative. I don't think it's up to a Fed chair
wrinkle on
to
my
seek a
face.
meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing
Wow.
that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down
done?
rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
Okay, he's done. Okay, let me put the music back on, but not too loud though. Go, turn it down lower. The music too loud, let me know, okay? If it's too loud, too low, let me know, please. Is the music okay? He's done. Oh, look at this candles here. Man, look like when the push through. the VWAP. $840, $850. Pretty slow day, huh? Broke that 42. Yeah, look like we hold at 850, 840, 550. Now touching that VWAP, push it back up again. The VWAP at 45. Dun, dun, dun. The 45 hold. Yep, 45 hold. Or not, we'll see. What time is it? About 23. Go! I'm out. 20 bucks. It doesn't want to go. I think I should switch it to trade mini instead of micro. Yep, trade mini, man. Micro is like 20 bucks, 40 bucks, 50 bucks, man. I think I should go with micro instead of mini. I mean, mini instead of micro. But again, very hard to tell right now. Wow. like some levels. Yeah, just broke that 45, right? Broke that 45. So yeah, I was watching for that. You know, keep trying to go through the 45 and stay above the 40. No, but not stay above the 45. That's why I went short. But again, I'm too. I'm trying to give it some more room to breathe in that, so I can catch a bigger move like this. But yeah, I was watching the 45. Yeah, I broke that 45 and she doesn't look back. Look at that, 45. We're looking at 40 points, man. 40 points. So yeah, that's the level right there. 45 support. And she doesn't hold, so did not hold. Went down to like 30, 40 points. Yeah. Like I said, these accounts here, I'm so close to request payout. So I'm just very, very conservative. I just want to put in the day trade. You know how Apex make you trade 8 days. 5 of those 8 days has to be $50 or more. So yeah, super conservative with these accounts, especially this account. Yeah, the balance on this is 52, almost 52,500. Yeah, just broke that level, the 50, 45 level right here. Yeah, that's 5 minutes. Let's see. Yep. Broke this here. She doesn't look back. This is the 5 minutes. 2 minutes and 45 seconds for this candle to close. Wow, look like she might want to be testing that low again, huh? The day low. Wow, look at that. This is the 5 minutes. Yeah, it's not surprised me if she go down all the way down here to retest in that day load again. But we have to watch for 65 to break. Down here we're watching for 40 to break. So I'm watching. Maybe a long. It's not a bad idea to thinking about going long, as long as 65 hold or 40 hold. So I'm looking at these two levels right now. 60, 63 and down here at 40. $60. I'm waiting. There's no way I'm go long right now. Here we go. Keep getting pushed through that. 760. And down here I'm watching for 740. I wouldn't go short, but it looked like I want to be testing that 760. Man, look like she wants to break 760, 740, and for sure that she's going to be testing that 678, 680. $765. Yeah, kind of tough to go short right now at these support levels. 65 and 40. It's tough to there you go. Looks that 765 hold. Yeah. Watch for 770 now. I'm looking for long right now, but we'll see. I may be wrong, but that's fine. No pain, no gain, right? I'm wrong. That's fine. Yeah, I'm wrong. Tough, man. Tough to trade. I guess I'm too early to go long. Dun, 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 dun. Yeah, I'm trying to micro. $3,000. That's awesome. Used to go again, trying to lure me back in, huh? I'm always, man. I won't mess up. Dun, 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 dun. Give it to me, baby. No, 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 no. Give me a push. Okay. I'm done. I'm done with that account. Can't trade, man. I'm $150 in the red with that account, man. That's not good. I don't know. I just want to go. What time is it? 34. Still early. So now we know that our top is at 800. Buy high, sell low. Not the problem. Okay. You might want to break that 64, 65. Not a good idea. to buy high, sell low. Dun, 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 dun. Dun, 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 dun. Buy high, sell low, man. That's my issues. Buy high, sell low. Give it to me, baby. Give it to me, baby. One more push. Please. One more push. Go, 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 go. Come on. Push. Come on. 8 more points. Go. Got it. $21. Hey, yeah. Crazy, huh? Back in the green. Scary man. Hey, Andy. Welcome back, my friend. Oh, Ian. No. Hey, you're crazy, man. Wow, how many points? Yeah, I'm trading micro. Not mini. Micro. Yeah, I took this trade right here, knowing that I better get out if come back against, go against me for like 4 or 5 points. Because once he breaks this 65, we're in trouble. But she did not do that, so. But I was ready to get out. Because look at this level right here. Very good support. So I was like, okay, let me risk like 7 points, something like that. Hey, yeah, now she goes. That's fine. Dun, back in the green. That's awesome. Wow. Went to almost the VWAP. Push it back down again. Did you make any trade last night? Man, it's like went crazy, huh? Went all the like 200 points, and then after that it went back down. I did not trade, but I guess Andy caught that, huh? Caught that move, 200 points. Dun, dun, dun. You did? Oh, okay. I know, that would be awesome. But it's just tough to catch that push. But yeah, next time I'll call you before I buy a whole bunch of stocks, push the market. So next time I'll text you. And Andy, I'm getting ready to buy $1 billion of stocks or something. I'll let you know. I'll text you. Yeah. Dun, dun, dun. Okay, Krista, we'll see you, man. Good luck to you. Take it easy, my friend. What is that? Why does the president say something? What is that? What is that? What happened? Okay, Andy, take it easy, my friend. What is that? What the... Yeah, I just did. $1 billion stock. Okay, take it easy, Andy. Have a good day, man. Good night, man. Look at that. Just keep going. Look like our dear Leah says something again, huh? He might say that I'll take over Vietnam. Vietnam become 52 state. 51st is Canadian and 52nd state. I'm gonna take over Vietnam. What did he say? Let me check. What did he say? Okay, what did he say? Wow. $20,000 again. Damn, a lot of volume too. Man. Hey Benny, how's it going? How are you? Good to see you, my friend. Man, I was going to go short. Man. How are you, Benny? No. I wish, man. I don't know. Yeah, thank you for stopping by, Benny. I was sleepy. Yeah. Had a late time. Where you at, huh? Oh, wow. $32. Oh, yeah. Okay, let me switch to a different account. Yeah, kind of late. Thank you so much for stopping by, Benny. I have to switch to a different account. Have you been trading, Benny? Have you been trading? Time is it? 49. Wow, 10 more minutes to go. MOC coming up in 10 seconds. Yeah, why not? Yeah. I heard that Andy saying that you've been helping him with some setup and thing like that. That's awesome. Yeah, good job, Andy. Take your time, no hurry. Whoa, look at that. Take your time, Benny. You can do this. You can do this, Benny. Take your time. Risk management. Risk management's in place. You'll be okay, my friend. Oh, yeah, short. I don't know. You did? That's good. I know, huh? Retesting that VWAP again. I was going to go long, but that's okay. $80. Watch for 80 to hold. Wow. 60 points, man. I don't want to chase it. 44, 80, 50 points. Wow. Yeah. Sometimes, man, just go. Yeah. I get you are the only one. Kinda. $900. Give it to me. Go. Got it. $90 with that trade. I'm good. Too small. Couple bucks here. Couple bucks there. Counts. Let me see. Let me switch account again. Like I said, I only want $50 per account. I don't need much. I did very quickly, knowing that I have to get myself out very quick, very quick. My stop is 15 points, but I'm planning in my head that 5 points, 10 points, man, I better get myself out because 15 point stop loss can run over me, just like that. But yeah. Let me see, 59. Time is it? 54. Oh, 45, huh? Let me switch account. 40. Okay, I'm going to trade another account. Like I said, these accounts are so close to pay out. I want to meet the $50 profit for a couple more times before I request payout. So, yep, not much money, but thank you, Benny. I try. Yeah. Not much today, but the point is that you know, risk management, discipline, and things like that, and money will come. You know, money will come. Yeah, I am, Benny. So scary, man, because these accounts so close to pay out, and you all know that when we mess up and we do not have some kind of control in place, risk management in place, you will blow up the account. I will blow up the account, even though I'm ready to get to request payout. So I have to be super disciplined to protect these accounts. You know, so close to payout, and I don't want them messing around. You know. Oh. Yeah. RC. Welcome, RC. Sorry if I say your name's wrong, but yeah. Welcome. Okay, Mavic. Thank you, Mavic. Hey, MB. How's it going? How are you, MB? Yeah, like I said, I'm trading micro today. Super crazy today, so I'm decided to trade micro. Yeah, it's just super crazy today, MB. That's why I trade with micro today. But so far so good for me. It's not too bad. Yeah, we must have our risk management in place no matter what, you guys. I mean, we work so hard and we invest so much time and money for it. Man, we must have some kind of risk management in place no matter what. Not the bottom line, you know? Yeah, we invest so much in trading, so I was going to go short. Like I said, I'm going to catch right now. My hard stop is 20 points. Take profit 15, but usually I get out very quickly. Not waiting for it to hit my hard stop at 20 points. So we got 2 more minutes to go. If I don't see it, I'm not going to trade. Like I said, I'm doing okay. You know, all my accounts still intact. All my funded accounts still intact. So and some profit too. So it's not much, but yeah. If I don't have to take any more trade, then I'm not going to take any more trade. But I'm not going to force a trade. Maybe one more trade, but I'm not going to force it. 40 seconds to go. Maybe one more trade. Look at the 5 minutes. Wow, we're at the top of this candle right now. This is the 5 minutes. Look like we're going to push a little bit higher. Let's see. One o'clock. Are we done? I don't feel it. Okay, I'm done. I'm done. Yeah, I was going to go long, but I don't know, for some reason I did not take the trade. Go. Would have caught 15 points easy. Yeah, I was going to go long. Right here, it broke that. Sometimes, man, I was going to go long. Oh, that's fine. Okie dokie. Are you trading with Apex MP? Yeah, with Apex, you have to trade 8 days. 5 of those 8 days has to be more than $50 to request a payout. And the minimum payout, I mean the minimum on your account in order to request a payout is $52.6, and you can request $500 payout. So and you can see that 2 of my accounts are ready to request payout. The top 2 accounts, and the third one I have not traded that third account yet, and the fourth. So so close. Yeah. Okay, Benny. Thank you so much, Benny, for staying up so late or woke up so early to come by and say hello to me. Thank you so much, Benny. Thank you, everyone. Yeah, not too much today, but at least I'm in the green. And super disciplined today, to be honest with you guys. I'm super disciplined today in terms of sitting on my hands more, not to make so many trades like before. So I guess that's a good good thing, not to trade too much. But anyway, thank you so much, you guys. We'll see you. What about 150K account? The same. The rule's the same. But I think with 50K, you have to make more. You have to make, what, $9,000, something like that. But with the 50K account, you know, you can make, $3,000 to pass the account. But the rule's the same. 8 days. And, yeah, 8 days and $50 plus for 5 days. For 5 of that 8 days. In order to request a payout, but I'm sure that you have to make more. Yeah, you need to go get some sleep, Eddie. Okie dokie. Thank you so much, you guys. We'll see you tomorrow. Thank you once again. Good night, you guys.